Welcome to the HouseLux Estate Channel, your reliable partner in understanding the dynamics of the stock market. Here at HouseLux, we're committed to helping you navigate the complex world of investments. We delve into topics that matter to you, from real estate to stocks and everything in between. Our goal? To equip you with the knowledge and confidence to make informed decisions about your financial future. Today, we're stepping into the fascinating world of stock market trends. But we're not just looking at them, we're learning how to analyze them using the power of artificial intelligence and data analysis. It's a cutting-edge approach that's revolutionizing the way we understand and interact with the stock market. So whether you're an experienced investor or just starting out, this video is for you. We're going to break down this complex subject into manageable, understandable steps. Stay with us as we unravel the steps of using AI and data analysis in stock market trend analysis. Before delving into AI and data analysis, it's pivotal to comprehend what stock market trends are. So let's take a moment to unpack this concept. Stock market trends are the perceived direction of the financial markets over time. These trends are typically classified into three categories: upward, downward, and sideways, or horizontal trends. An upward trend, also known as a bull market, is characterized by rising prices. A downward trend, or bear market, on the other hand, is marked by falling prices. A sideways trend is when the market is neither appreciably up nor down. Now, why are these trends important? Simply put, they're the pulse of the marketplace. They help investors understand where the market has been, where it's currently standing, and where it might be heading. This information is crucial for making sound investment decisions. However, the challenge lies in the analysis. Manually analyzing stock market trends can be a daunting task. The market is a complex beast, influenced by a multitude of factors, from economic indicators and political events to investor sentiment and company performance. Furthermore, the stock market is not static, it's continually changing. This dynamism means that what worked yesterday may not work today, making trend analysis a perpetually moving target. To make matters more complicated, the stock market is a massive ocean of data. Every minute, countless transactions take place, each generating its own data point. Manually sifting through this ocean to identify trends is akin to finding a needle in a haystack. It's not only time-consuming, but also prone to human error and bias. In light of these challenges, the traditional methods of trend analysis are gradually giving way to more advanced techniques. Enter artificial intelligence and data analysis. These technologies promise to revolutionize the way we understand and predict stock market trends by automating the process and eliminating human error. Now that we understand the importance of stock market trends, let's explore the role of AI and data analysis in this process. A scene script. AI and data analysis have revolutionized the way we analyze stock market trends. Artificial intelligence, or AI, and data analysis are powerful tools that have transformed the financial landscape, particularly in the realm of stock market trend analysis. These technologies have the ability to consume vast amounts of data, process it, and deliver precise predictions, all at a speed that leaves traditional methods in the dust. AI utilizes algorithms that learn and adapt over time. These systems can sift through vast amounts of data, spotting patterns and trends that would be virtually impossible for a human analyst to discern. In the context of the stock market, AI can analyze years of price and volume data, news articles, social media posts, and even geopolitical events to predict future market trends. This allows investors to make more informed decisions, potentially maximizing their profits and minimizing their risks. Data analysis, on the other hand, is all about interpreting complex data sets to extract meaningful insights. In the stock market, data analysis can be used to understand the behavior of different stocks, sectors, and the market as a whole. It can identify patterns, correlations, and trends, providing a solid basis for investment decisions. Together, AI and data analysis create a dynamite duo. They bring a level of precision and speed to stock market trend analysis that was previously unimaginable. But they also level the playing field, providing individual investors with the kind of powerful analytical tools that were once the exclusive domain of large financial institutions. Yet with all this power comes complexity. While these technologies can churn out valuable insights, it takes a certain level of understanding to interpret and apply these insights effectively. The question now is, how does one analyze stock market trends using these technologies? That's what we will explore next. Analyzing stock market trends using AI and data analysis involves a series of steps. Our journey through this intricate process begins with data collection. This is the foundation of any analysis and involves gathering vast amounts of information regarding stock market trends. This data can come from various sources, such as financial news, social media sentiment, historical stock prices, and other economic indicators. The more comprehensive and diverse the data, the more accurate our AI model will be. Once we have collected enough data, the next step is data cleaning. This may seem mundane, but it is crucial. It involves removing any irrelevant, duplicate, or incorrect data, ensuring that our AI model isn't learning from inaccurate information. Like a chef carefully selecting the best ingredients for a dish, we need to ensure that our data is as clean and accurate as possible. Next, we move on to creating an AI model. This is where the magic begins. We use machine learning algorithms to develop a model that can learn from the data we've collected and cleaned. These models can range from simple linear regression models to complex neural networks. The choice of model depends on the complexity of the data and the trend we're trying to predict. Now that we have our model, it's time to train it. This is akin to a student studying for an exam. The model learns from the data, identifying patterns and relationships that can predict future trends. This process can take time, and it may involve tweaking the model or going back to the data collection and cleaning phases to ensure the model is learning correctly. Once our model is well trained, it's time for interpretation of results. This is where we get to see the fruits of our labor. The AI model will provide predictions of future stock market trends based on the data it was trained on. These predictions are then analyzed and interpreted to inform investment decisions. It's important to remember that while AI can make accurate predictions, it's not infallible and should be used as a tool alongside other analysis methods. Finally, it's crucial to continuously monitor and update our AI model. The stock market is a dynamic entity, constantly changing and evolving. By keeping our model updated with fresh data and fine-tuning it over time, we ensure that it remains accurate and relevant. With these steps, one can efficiently analyze stock market trends using AI and data analysis. It's fascinating how technology has made analyzing stock market trends effortless. This statement, as we've discovered today, is not just a flight of fancy, but a reality we are living in. Over the past 10 minutes, we've embarked on a journey of understanding the world of stock market trends and the role of artificial intelligence and data analysis in simplifying this complex process. We began by delving into the basics of understanding stock market trends. The importance of recognizing these trends cannot be overstated. They are the lifeblood of any investment strategy. Understanding these trends allows us to predict potential price movements, enabling us to make informed decisions. Next, we explored how AI and data analysis are becoming increasingly integral to stock market trend analysis. This is an era where machines learn from past data to predict future outcomes. AI and data analysis are not just buzzwords, they are tools that, when used correctly, can lead to successful investments. They help sift through vast amounts of data, identify patterns that the human eye might miss, and provide actionable insights. We then walked through the step-by-step process of analyzing stock market trends using AI and data analysis. This process involves data collection, pre-processing, training the AI model, and finally, making predictions. It's a process that seems daunting at first, but with the right tools and a bit of patience, it's something anyone can master. In conclusion, the ability to analyze stock market trends using AI and data analysis is a powerful tool in the hands of investors. It's not a silver bullet that guarantees success, but it certainly increases the odds in our favor. It's a tool that allows us to work smarter, not harder. Remember, understanding stock market trends and the role of AI and data analysis in this process is not a one-time event, but an ongoing journey. Continue to learn, adapt, and grow. Thank you for joining us today on the HouseLux Estate channel. Remember to subscribe for more insightful content. Until next time, keep exploring the power of AI and data analysis in the stock market.